For the first time since 1996, 5 months of market falling and closing in the red. Is Nifty not going to be relevant anymore in the upcoming years? Zomato, again a crowd favorite stock. And 2, Mukesh Ambani's Jio Finance, replacing 2 large companies in Nifty 50.
BPCL has a PE of 6.88 and Zomato is coming in with a PE ratio of 333. High PE companies coming into Nifty 50 is also raising an alarm in investors' mind.
Our long-term goals are attached to this Nifty 50 investment. We are planning a retirement based on this. If the methodology itself is a wrong methodology, then we should all be concerned about it.
So there is a criteria which is preventing new companies from entering Nifty 50 like this. Even in 2020 March, Nifty was at the same PE ratio.
Let me break that silence. I've added 20% more to it. It could fall further, but still I don't want to lose out because everything is falling into the right place and the right time.
If Zomato falls by 100%, the stock becomes worthless, Nifty will move down by... For the properly prepared, the bear market is not a calamity, it is an opportunity. And that's what we have been seeing for the past many months now. Now, Nifty has and is in the journey of falling for the 5th consecutive month. I know we discussed this already. For the first time since 1996. 5 months of market falling and closing in the red. So Nifty right now at 22,500 without a clear bottom inside. I think the markets are keeping everyone on their toes right now.
We've all been expecting this and we've seen that happening. The only thing I would again repeat saying is that have confidence in the Indian markets. And right now, it's like the best time to start even the SIPs or investments. So I feel this is a great opportunity.
Yeah, viewers would also be like kind of looking at Nihal and cheering for him. Because in the last podcast, he was like with a lot of audacity, he said that markets will fall further from there. And then is when he would plan to invest more money into the markets. Very interesting. But that's where I'm super happy that we have resumed our automated trading at marketfeed, and very happy that this week we are ending up with nearly 1.5% profit. So yeah, back with strength and super happy about
Yes,
that.
everyone was asking when we'll resume, and yes, officially we're back in business. The links will be down in the description if you want to get started with automating your trading journey. So Nifty was taking beautiful support at 22,800 multiple times in a row, and after that with the US market also falling between the week, the support getting broken, and we know where we are at right now. I think rather than just talking about Nifty falling, people were prepared for that. We have to discuss this crazy new thing that a lot of people are talking about, which is Nifty losing its respect, its shine? Is Nifty not going to be relevant anymore in the upcoming years?
And the concern and panic of people who already have invested into Nifty and questioning their investments right now.
Yeah, I think this is all highly emotionally driven given the markets are falling and they're seeing certain things happening to Nifty, which we should talk about. They are like losing their mind and feeling really bad about whatever is related to the equity market. So I think that's the larger mindset, the emotional state in which investors are in, Indian investors are in. And I think that is where this topic is really relevant. But
that's where I'll introduce the host for today's episode, the 15th episode of the Aftermarket Podcast. My name is Ajay. This is Nihal Bandapalli.
Hi.
And this is Sharik Shamsuddin, CEO and co-founder of MarketFeed.
Hi.
So 2 relatively new companies. 1, Zomato, again a crowd favorite stock. And 2, Mukesh Ambani's Jio Finance, relatively newly listed stocks, replacing 2 large companies in Nifty 50. So these 2 stocks entering Nifty 50 by replacing Britannia and BPCL. So if you're just for context again, Jio Finance last year made a revenue of 1,900 crores. Meanwhile, BPCL made a revenue of more than 1 lakh crore. Just imagine the comparison, more than 50x the revenue. And even if you look at the profit numbers of Zomato versus Britannia, Zomato made a decent profit of around 650 crores, but Britannia made a profit of 2,100 crores. So that is where this entire narrative that are these new smaller companies, or let's call it the new players in the market, are they just
making their way into something as respected as Nifty? I think that is what is happening here. People look up to Nifty as, I mean, it's not that they are looking up to it as something. It is the benchmark index of the country.
It's the OG index of everything.
So when people think about Nifty, I think there is an inherent respect attached to it, and there is an inherent natural thought that companies like Reliance, HDFC Bank, ICICI Bank, Britannia, like such large companies are part of it. Legacy brands, behemoths, big brands, and age-old companies run by grey-haired people. Maybe like that.
Which actually represents India.
Yeah, stuff like maybe that's a narrative which is in people's mind, and I think that is very, very right. And all of a sudden, they're reading headlines saying that. Like yesterday's company started by some kid somewhere, just 10 years old, are replacing these behemoths, as you rightly said, in Nifty 50. I think that's where people are losing their mind. They're now questioning Nifty. Is what is happening? Is it really nice? Is Nifty actually having its credibility as we were discussing? I think that is what is happening here.
Yeah, there is this term, right? Blue chip companies. So blue chip companies are the best performing companies of any country, and they've been very stable in terms of their performance, their revenues, their profits, and generally Nifty 50 has that vibe. It has a blue chip vibe, as you said. Legacy companies. But when these new companies, which can't be called blue chips yet, they join this index, I think a lot of discussions going ahead.
Yeah, and that's where, like you said, I mean, revenue of Jio Finance is what? Under 2,000 crores.
Yeah, mostly from dividend income of Reliance. They don't even have an operating income yet.
Correct. Right? So Jio Finance as a company, they don't have their primary business started or running yet. And they are in Nifty 50, and that's why people are losing their mind, and I see nothing wrong.
And this is where actual investors who are trusted in Indian companies are worried about these high PE stocks getting into Nifty 50 and their overall portfolio getting overvalued maybe getting into a bubble, and that's the concern people are now getting into.
Yeah, that's a good point, Nihal. For example, BPCL has a PE of 6.88 and that BPCL is going away, and Zomato is coming in with a PE ratio of 333.
Think of a
and Jio Financial is coming with a PE ratio of 266. So low PE stocks moving away and high PE price to earning stocks coming into Nifty 50 is adding or increasing the valuation of Nifty 50.
On one side,
Yeah, last week's podcast, we were discussing about how the world is singing that Nifty is already valued high, its valuation is going high. And we also quoted Ashwat Damodaran saying that the kind of valuation Nifty is trading at, it doesn't really make sense. That is where such high PE companies coming into Nifty 50 is also raising an alarm in investors' mind as to if Nifty's PE is also increasing, it doesn't look good from the outside. Right?
Yeah, international investors losing credibility could be a very, very major thing.
And this is where actually me and I think so many other investors also would be starting to question of the methodology of Nifty 50 as an index even. So how are their rules made? Is it even the right thing to do right now when these new age companies are replaced these giants? So should be there any changes in the methodology that Nifty 50 is following? Or is this even right? Because our long-term goals are attached to this Nifty 50 investments. We are planning a retirement based on this. And if the methodology itself is a wrong methodology, then we should all be concerned about it.
So these are all the discussions which are going around social media nowadays. Everyone making fun of these two stocks and Nifty as an index. Its core rules are being made fun of. I think that's where we should come in. We should answer or try to give people the answer to the question that, hey, is Nifty investing dead? Should I be concerned about my investments in Nifty Bs or any Nifty linked mutual funds that I have today? And is eventually Nifty going to be just filled with junk stocks? That's also a concern which is running around. So let's clear everything that people need to know in this podcast right here.
I hate it when this happens, right? When something small is even happening in the market, people blow it out of proportion and make a large thing out of it, and then spread more fear among investors. And I strongly believe nothing of such sort should be happening. But anyways, hey, what is in our control? It's anyways happening. So as Ajay is telling, our job is to come here and bring in clarity. So to bring in clarity, the very first point I want to put forward is to understand what is Nifty even. Right? Let's understand what is Nifty as an index. How is it even calculated? How is it constructed? What is the logic or rules of the index which is Nifty?
So simply putting it out, Nifty is nothing but the 50 largest market cap companies which are ranked by free float market capitalization, and they're ranked according to their weightages, and that is simply what Nifty 50 is, right?
Very simply put, it's the top 50 largest companies in India in a very layman's term, but then slightly complex term is what Nihal said, free float market capitalization. I think that's where Ajay will come in.
I think just for the sake of this video where people are trying to dissect Nifty, we have to explain that.
Yeah,
Otherwise,
correct.
in a general term, what you said is right. The
Correct.
top 50 companies of the country. So free float market cap is whatever percentage or whatever amount worth of stocks are available to trade for the public. Let's take Reliance for example, and let's say it has a market cap of 15 lakh crore.
Yeah.
50% is held by the promoters. Do you think that Ambani is tomorrow? Is there any real possibility that he is going to transact for his promoter holding? Very less chance. So whatever is the amount of shares which are ready to be traded for the public, that market cap is what is considered. Then all the companies in India are ranked. 50 largest companies there are decided.
Yeah.
Okay. That's the first criteria. After that, there are some smaller criterias also. It should already be FNO enabled.
The companies listed should be an FNO.
Yeah, it should already be FNO enabled.
Yeah.
Then 2, it should have been listed for at least 1 month. So
Yeah.
there is a criteria which says that, or which is preventing new companies from entering Nifty 50 like this.
So
right?
this is like maybe tomorrow Zerodha coming out with their IPO and them getting listed. Maybe they could be a large cap stock, but they might not be part of Nifty 50.
They have to wait at least 1
1 month to get into
and
Nifty
there
50.
is a calculation period also.
Yeah.
This index rebalancing happens 2 times in a year.
Yeah.
That's when it happens. So let's say a Zerodha comes in and they have to wait at least 1 month to get or to join the Nifty 50.
Yeah, and the cutoff dates are January 31st and July 31st. So before that, they have to be listed 1 month before at least.
Yeah, and there is also this other rule which talks about impact cost, but that is okay. Most large cap companies which have FNO enabled and they are coming in the top 50 list, it will be satisfying.
Yeah, Ajay, maybe this is where you should even explain the weightage part. How a stock like Reliance has more weightage when compared to a stock like Zomato in Nifty 50.
First thing to do, rank all the stocks in India by free float market capitalization.
Yeah.
Then select the top 50 out of it.
Yeah.
Imagine it as a single pie. Okay. So that's the total or the entirety of the largest 50 companies in India by free float market capitalization. So now if the total market cap of these 50 companies is let's say 100 lakh crore. And if Reliance has a market cap on its own of 20 lakh crore,
Yeah.
it will have a weightage of 20% in Nifty.
Yeah.
So that's the numbers we have today. HDFC Bank actually has a weightage of 12.8% in Nifty. Your ICICI Bank has the second highest at nearly 8.8%. And the third highest weighted stock in Nifty today is Reliance Industries. So even though it is the largest company in India, it is still the third largest company in Nifty because of all the rules that we talked about.
Right.
Yeah.
So to summarize this is pretty straightforward. Nifty is nothing but a combination of the top 50 largest companies in the country.
Yeah.
And every 6 months it is reviewed.
Yeah.
Every 6 months, if there are new companies which are larger than the 49th and the 50th companies in Nifty,
Yeah.
the last 2 will be removed and these 2 new will come. And the next, after 6 months, a review is done again. And again, Nifty will become the largest 50 companies in the country.
Yeah.
So if you think about it, it is a pretty neat, clean, rule-based index created to show or to include the largest 50 companies in the country.
Yes.
And the purpose of Nifty or the benchmark index of any country is as a measure of the health of the economy of the country.
Correct.
Because it always includes the largest companies. So that is where I think a benchmark, any benchmark for that matter, has to have a very simple rule. Something like this,
Yeah.
top largest companies in the country, so that it is always an indicator of how well the economy is doing. Because if the economy is doing well, the top companies will also be doing good in the country. So I
Yeah.
think that is what Nifty is, and I think it is good as to what the rules
Yeah.
are.
Now that we have discussed this, I think this is what the global practices and all the global markets have their benchmark indices having their structures or rules. So if you look into maybe US having S&P 500, they follow the same structure and rules. If you look into Hong Kong and their Hang Seng index, or even the Europe having FTSE index that they have, everybody follows the same methodology where they take in all the free float market
So for the
capitalizations.
question that, hey, is Nifty broken? I think that's kind of giving us or comparing us with the global markets. We are on the right track.
Yeah, we
Yeah.
are not reinventing the wheel here.
Yeah.
We are not
Yeah.
innovating here. We are just following what all the countries are following, all the larger markets are following. So it's pretty standard is what we are coming to
Yeah.
in terms of what Nifty is from a pure theoretical standpoint.
Yeah.
Yeah.
So then let's get into what is being discussed, break it down one by one and try to get into the logics of it. So the first problem being discussed, the new kids in the block joining Nifty 50.
Yeah.
So I think what's the problem there? there. So that's where BPCL, a 1 lakh crore annual revenue company, is being replaced by Jio Finance with a revenue of 2,000 crores. What is actually happening? Are people going to be, or do people need to be concerned? So these are companies which have shown their merit in one way or another. They have large market caps for a reason. Investors have trusted them because they've been able to grow their revenues fast.
Correct.
Okay, and that's in the case of Zomato. And even in the case of Jio Finance, it has a huge holding of Reliance Industry. It's essentially a holding company today. So even with that holding company's value, it is worthy enough to be listed.
Yeah.
So what's the problem there? Even looking forward or 5 years into the future, I think Zomato has potential to grow personally.
Correct.
And even Jio Finance, if and when they launch their new business verticals, I think it will be a high growing company. Not talking about the stock here, high growth company, both have the potential to be. So it's rewriting or pushing out the old slow companies out of Nifty, and maybe it's a good thing is what I feel.
Yeah, even if we look back or maybe backtest the data, maybe HDFC or ICICI that we are seeing in the number 1 and number 2 would have been some 10th or 15th or 20th company. They would have grown and climbed up the ladder and become number 1. And that is what is just happening.
Yes.
Regular churn.
Right. So by rule, by theoretical rule, this is what is supposed to happen in Nifty.
Yeah.
Good companies are supposed to come in. Some companies, when they're losing their value, are supposed to go out. There is no point in attaching new kids or old boys or like any such story. Do not hold any sort of merit in this discussion as something we clearly need to understand.
And I'm sure people would be convinced and, agreeing to our point. Yes Bank is a bad stock when compared to Zomato. I would personally have Zomato in my Nifty 50 portfolio than having a Yes Bank.
Yeah.
So that's how it works.
Yeah,
right?
so I remember such conversations happening a few years before when Adani Ports made its way into Nifty 50
Correct.
as well. So the entire point being Nifty 50 is a rule-driven index.
Yeah.
There is no scope of any emotions to it. I mean, there's no point in us sitting out or anyone sitting out and saying that, hey, this company is getting into Nifty 50, something else is going out. There is no point to that conversation because it's a systematic rule-driven index in itself. There are certain rules by which some companies will come in and some companies will go out. So that discussion, I completely believe, has no merit to it. So that's where I'll go into the second problem that people are talking about a lot, that these high PE companies, we discussed about that, right? Zomato having PE of above 333.
Yeah.
Jio Financial having PE of above 200 coming into Nifty and making Nifty's PE going up, thereby making Nifty a less attractive investment. That is what is being discussed. Again, no merit, because the reality is that both of the Jio Financial and Zomato put together does not even have 1% of weightage in Nifty.
Yeah.
Which means that even though they are coming in with very high PE, Nifty's PE is not even going to move up by more than 0.5.
Yeah.
That is all the impact it is going to make.
Yeah, so it's the same effect as Nifty going up by 0.5% itself.
Yeah.
So from 22,500 today, if it moves up 125 or 130 points, will anyone care?
Yeah.
No, right?
Not much
They
of
won't
a
be discussing,
impact.
hey, suddenly it's overvalued. No, it's the same effect. In essence, index moving up 0.5%, same essence is what is happening here. So I think that's where we should even discuss right now. Nifty's PE is at 20.
Yeah.
I think it's at the lowest since the 2021 correction, which I've been quoting over the past multiple episodes. The last time Nifty's PE touched 20 and even went down to 19, from there Nifty gave the mother of all rallies once again in 2022 June.
Yeah, and even statistically, investors' favorite sweet spot for Nifty investing is between 18 to 20. When Nifty P falls down to that ranges, people love to invest at that level. And the 15% correction that we are seeing, Nifty P being similar to 20 levels, this is all like coming into the place for the best place to invest into Nifty.
Yeah, does it mean that Nihal, who has been sitting on cash for an opportunity to invest in, does this mean that you're planning to deploy that
So
cash?
let me break that silence. I've actually put in 20% of what. So
Oh.
I've invested 15% in my last time when we had this discussion. I've added 20 more percent to it because I feel it could fall further, but still I don't want to lose out because everything is falling into the right place and the right time. So
What was the trigger? 22,800 getting broken on the lower side? Is that when you decided to put in?
it's just, if you see, the fall happens much faster. You see the candles becoming faster if there is a panic in the market. But last 1 week, if you're seeing, it's been consolidating. So I don't know if it is going to be a breakout or a breakdown. So if it is a breakout, I don't want to lose out on it. So I've just invested another 20%. But still understand I have still 60-70% still cash balance left, which
Yeah.
I would deploy eventually.
Even in 2020 March, Nifty was at the same PE ratio.
Correct.
Okay, so let's move ahead
Ah,
to the third
yeah.
point.
And then coming to the third point. So whoever have concerns on the Nifty methodology and all, we have different options and different opportunities. We've been discussing and vocal about strategic indices, and we've been even recommending large cap, multi cap, mid cap, multiple options other than Nifty 50 for our investors. We've been even in the last video, I've revealed my mutual fund portfolios or my ETFs. Sharik did, you did. So if somebody really has so much problem with Nifty methodology right now and they feel it could be overvalued, just explore other stuff. Maybe put your money into mutual funds, active funds, passive funds, thematic funds. There are 100 other investment opportunities. But again, still stating the fact and establishing that Nifty 50 is still great index to invest in. You don't have to think so much. We've been following it from last 25, 30, 40 odd years, and it will still continue to be that way. So you don't have to think so much on it.
Yeah.
So the larger point being Nifty need not lose any respect. Nifty is not broken. It is all right. It is how it works. It is how it is being calculated across the world. So things are all fine is what I think we should reassure to the audience.
And there is a high possibility that Zomato, when it gets added to Nifty 50, will have a weightage of 0.5%, as you said. Again, putting things in context. Tomorrow, if Zomato joins Nifty 50, people are concerned. Hey, it's a highly volatile stock. What will happen to Nifty?
Correct.
Even if Zomato falls by 100%, the stock becomes worthless, Nifty will only move down by 0.5%.
Yeah.
Just imagine that.
Like rightly you said, the smaller companies wouldn't cause a major dent to Nifty 50, but actually the concerning part is the larger companies which hold the highest weightage. 4 or 5 stocks having 50% or 40-50% weightage in Nifty, I think that should be the real concern one should be talking about.
Yeah, absolutely. I think that should be the talk of the town. If people are to be concerned about anything, it should be about some companies having huge weightage in Nifty. Because making noise about 2 companies coming into Nifty and having under 1% weightage, as Ajay said, even if those companies go to zero, Nifty is not going to be affected much.
Yeah.
That is where if you look at HDFC Bank having 12% weightage in Nifty.
Yeah.
And then there is Reliance having some 8-9% in Nifty. ICICI Bank having again 8-9% in Nifty. So if something is happening bad to these companies, that is where Nifty is going to hit more. And I think if there is to be any discussion around concerns around Nifty, only merit is in around, huge weightage to some companies.
So actually this is me logically thinking, is our portfolios even diversified? Or is it just diversified between the top 5 or 6 stocks that we are putting into Nifty 50?
I mean, there's this common argument, right? So even people do this. They buy different mutual funds under the same assumption that it will automatically become diversified.
Yeah.
But most of those mutual funds or your index funds, they'll be having 5-6 stocks in common. So that's where you should be really aware that buying different mutual funds or getting into a single index won't solve your diversification problem.
Yeah,
right?
but sadly, even if you are to have this conversation would also end up at the same place, which is Nifty is calculated in a specific way, which is really logical, and the entire world follows similar format, and it is fine. Let it follow that. If you want to invest into something special, different, if you do not like the logic, you're always open to investing into actively managed mutual funds. Or to solve this problem of some stocks having high weightage, you can even invest into something as simple as a strategy index like Nifty 50 equal weight index. So you have solution if you have any concern specifically, but otherwise I still strongly feel that Nifty as a benchmark index, which is a measure of how the economy of a country is doing, what we have as Nifty 50 is absolutely fine.
Yeah, and the beautiful strategy index that we spoke about or discussed here, which was Nifty 50 Value 20, investing the 20 most valuable from this top 50 cream layer stocks, blue chip stocks that we were talking about. Maybe people can explore that as well, right?
Yeah. So I think that's where we should wrap up today's show. We got a lot of discussions in, and I think people will find value in this episode as well. Hope it was short and sweet. So as always, you can check out all the shorts that we publish on both this channel as well as on our Instagram channel. So a lot more interesting stories happening in the market. So today, Polycab and even Havells, they both fell by more than 10-15%. So what happened there? Ultratech Cement, or the Aditya Birla
Group.
they're entering the wire segment.
Yeah.
So
Yeah.
last time they disrupted the paint industry. We
Yes.
even had a full episode on that,
Yeah.
right? How they're killing other paint companies and the paint industry not growing. And this also being one of the hotly discussed topics right now.
And even the rumors of import duties on EV cars coming down, and giants like Maruti, Tata Motors, Mahindra in panic. All of these are also running. But I think that is for another day and another conversation. And maybe this is
Yes.
where we should wrap.
Yes.
So this is me, Nihal, signing off. Bye. And
Bye bye.
Bye bye.